Hi everyone, this is Finding Value. Hope you're having a great day. I'm going to kind of dive into how do you protect your wealth from directly getting taxed and also the tax of inflation. So I'm going to go over some slides. I'm going to start with what I think is the problem, and I'm going to end with how to protect your wealth and kind of some information on the requirements for taxes in precious metals. So let's jump right in. You're going to lose the video here. So, how to protect your wealth from direct tax, someone directly taxing you. So it could be a direct tax on either income or your investments, and then the tax of inflation. So first, we're going to start with the problem, or at least what I think the problem is. So this is on a state basis. So this is how well funded are pension plans in your state. And if we're looking at tax revenues for states, you want to see, well, what is their balance? What does their unfunded, pensions look like per state? And it looks like the worst states are Colorado, where I reside, Illinois, Kentucky. We've got New Jersey and Connecticut. Those are the worst. The best states look like Wisconsin, South Dakota, New York, Idaho, and Tennessee. Those look like the best states. So these states, if they need to increase taxes, they can't print their own money. It's not like a Federal Reserve or a federal government. They're just going to go to the Federal Reserve and say, hey, print some money. These guys can't print money, so more than likely, these states that are in problems are going to have to increase their taxes or do something or incentivize people or businesses to move to their states to increase tax revenue. Here's the growing gap between assets and liabilities. States had just 71% of the assets needed to fund promised benefits. Now, if you looked at projected assets, they project it going down, so the gap's getting larger as we go forward, which is definitely a problem. And COVID, I'm sure, has had a massive impact on this growing difference between assets and liabilities. Now, this is from kind of a total look at debt. And I got this from Bridgewater, which is Ray Dalio. And if you look at this is ridiculous. So you've got government debt, private debt, pension liabilities, other mandatory government spending, Medicare, and Social Security. This is on a percent to GDP. We are over 1,000%, and this is in 2015. It is vastly worse now. So what this is showing is that I don't think there's any way that you can pay this back, is what this is showing. So if they're going to almost all governments try to paper this over. If it's a federal government problem, they usually just print money and they steal or tax the people through inflation, which is the supply and demand of money. The supply and demand of money is just a relative how much supply and what's the demand of goods and services out in the economy. The difference is inflation. So I also wanted to break this up. What does the total US debt look like per working adult? And this is just ridiculous. So we've got household debt, federal debt. We've got non-finance corporate debt, financial sector debt. We've got all this debt out there. And right now, when they ran it in 2018, it was over $400,000. It's probably like $500,000-$600,000 today, since the federal government has really stepped up their spending from COVID. So on a per working adult, we're at $500,000 or $600,000. So they're either going to tax it directly if it's a state, or they're going to tax it through inflation of the currency. They're going to steal the value out of the currency. So how do we protect our wealth from all of this debt and potential money printing? So there's three stores of value, three stores or preservation of wealth. One is precious metals, 2 is real estate, and 3 is art. So in precious metals, what I advocate is take physical delivery, which means you own it physically, coins, bars, whatever it may be. Now, what's the tax requirements in relationship to dealing with physical precious metals? There's no 1099 required on swapping your metals if it is less than 1,000 ounces of silver, 25 ounces of platinum, palladium, actually I think palladium's 100 ounces now, and gold. In American Eagles, I don't know if a 1099 is required at any quantity. So American Eagles, there's an incentive to do American Eagles because you don't have to do 1099. And the rest are going to have some restrictions depending on what you're transacting. Bullion is this, and so are foreign government issued coins. I don't know of a way that they can come up with a way to tax your physical holdings. I don't know if they're going to come to your house. I don't know if they know that that you even own it. So I don't know if there's a good way to tax the physical holdings of these precious metals. Precious metals offer inflation protection. If they print more money, gold and these other monetary assets, which are precious metals, will go up with inflation. So another thing it is, if you have any sort of monetary problem, precious metals is a monetary protection against those problems. If the currency defaults, if we go into a hyperdeflation, if we have too much debt and we implode from a debt implosion, we are protected, if you're a precious metal owner, from all of those monetary problems. It also is a protection against energy scarcity, whether it be a long-term structural problem in energy or a short-term blip of a war or something happening, like something happens where something gets shut down, or energy becomes scarce. There's a bunch of nationalization that happens, and they don't run at near their capacity. So we're short in a short-term problem of energy. And also looking backwards, precious metals have been thousands of years of wealth preservation with precious metals. You can't say that about Bitcoin. You can't say that about any single currency, bonds, stocks. It just doesn't have the history that precious metals has. Another way to protect wealth is through real estate. Real estate can be a very good bet because it's a leveraged bet against inflation. You can borrow money and lots of it and put very little money down and have an asset that appreciates on the total price of the asset. So it's a leveraged bet, but leverage can also work in the opposite direction if you're wrong. If COVID has all this unemployment, and let's say it does have an impact on real estate, even though we're in a real estate boom, in my opinion, in an expansion phase. Please see my other videos on that. It could go down and something can happen and leverage works against you and can hurt you pretty bad. The cost to produce homes will increase if we have inflation. We are in an expansion phase, so the demand for products, lumber has gone way up, and I've talked about lumber in a couple of clips, but lumber has gone way up in price. Copper's gone up in price. All of these things are going to continue to go up, especially if the dollar declines. One negative aspect about real estate is they can increase property taxes on you. So if the states, which they are going to probably be in trouble at some point, especially from COVID, more unemployed, less tax revenue, businesses are closing, they're going to have to make up that tax revenue difference. So we could see increased property taxes, and you are exposed in real estate to that. Another thing that you're exposed to is if your property values continue to go up, your property taxes will go up naturally, and you are exposed to higher insurance rates because you're going to have to insure a much greater or more expensive home, even though it's the same house. Art, I know it's one of the wealth preservations, but I don't know a ton about this asset. I really don't. And I'm going to show you Exter's Pyramid. Exter's Pyramid is the lower risk of default as you go down. Gold and precious metals have zero risk of default. It is a final payment. It is not a future payment. Paper money is a note, which is debt. Debt is a future repayment. You are going to owe something in the future, whether it be a natural resource or a natural resource that's been converted to a product. Everything else carries exponential risk as you go up, because obviously you can default on real estate if you don't own it. Governments can tax you more on real estate and whatnot. But I wanted to go over and show you that gold is the least risky asset. Now, I also want to touch into the dealer's responsibility when you go to transfer metals. So the criteria for bars and rounds by customers. So you go in, it's got to be 0.995 or greater. So we're looking at, most silver and gold and all that is greater than that. So the sales, it says a purchase quantity of 1,000 troy ounces or more. That's of silver. And palladium and platinum bars or rounds require the smallest qualifying quantities of 100 troy ounces and 25 troy ounces respectively. So I think palladium's 100 and platinum is 25. And I think it's 25 for gold as well. Now here's coins. So the other ones are bars and rounds. So that's just bullion. These are government issued coins. Now 1 ounce gold maple leafs is a minimum of 25 coins. So you go over 25 coins, a 1099 is going to be required. It's going to be reported by the dealer. Same with gold Krugerrands, Mexican, I think those are Libertads or Onzas. And then US coins composed of 90% silver. So anything with 90% silver content that exceeds the face value of $1,000 will have to be reported on a 1099. And it says right here, such pieces included, but are not limited to gold coins with fractional denominations, gold or silver American Eagle coins, any pieces of foreign currency that are not explicitly mentioned in the IRS reportable items list, as well as pieces of US currency that were created subsequent to the list of 1980. So those are the minimum requirements there. And the capital gains tax, granted, even though a 1099 is not required by a dealer, because I wanted you to know what the dealer's requirements are, the customer's responsibility, which is you're supposed to, report any customer, you're supposed to report any gains as capital gains on your taxes with precious metals. Hopefully this, guys, hopefully this helps you. I appreciate you guys listening to this clip. Please click subscribe, rate it, leave any comments you'd like, and I hope you guys have a nice day. Thank you.